Welcome back to the Discount Property Investor Podcast. Our mission is to share what we have learned from our experience and the experience of others to help you make more money investing like a pro. We want to teach you how to create wealth by investing in real estate the Discount Property Investor way. To jumpstart your real estate investing career, visit freewholesalecourse.com, the most complete free course on wholesaling real estate ever. Thanks for tuning in.
All right, guys, welcome back to the Discount Property Investor Podcast. I am your host, David Dodge. My co-host, Mike Slane, is home for the evening. It's already 5 o'clock in the evening, but I wanted to jump on and do a podcast specifically for all of my listeners and viewers that are interested in the BRRRR method. All right. I have on a special guest today, Brian Dolly, and Brian is from Ground Floor. And Brian's going to tell us a little bit about this product that he has that can help investors basically anywhere in the United States get into the deal with the financing aspect of things. So, Brian, welcome to the show. How are you today, man?
Good to be with you, David. I'm great. Thanks for having me.
Hey, thanks for coming on, man. So before we started this episode, I was chatting with Brian a little bit about Ground Floor. And I knew a little bit about it, but I didn't know a ton. But what he was telling me so far really spiked my interest, because I'm always talking to students. I'm always talking to other investors that, are wanting to do similar to me in terms of the BRRRR method. They're wanting to, start building that portfolio, and they maybe already have a little bit of private money or a little bit of hard money, but they're not really sure about the entire process. And I was telling Brian, I said, one of the things that is really missing, is somebody that is nationwide. And he said, well, hey, we got you covered with that. That's awesome. So you guys are in like 49 states. Essentially, it's basically
roughly. Yeah. It's
everywhere.
About 40 some odd states.
Yeah. 40 some odd states. Okay. Awesome, man. That's really cool. So Brian, tell us about Ground Floor. How did you get involved with it as well? Curious.
Back in 2012, Congress passed an act, known as the Jobs Act. Some people may have heard of it. People were excited about it for a lot of reasons. One reason is it allowed for crowdfunding, equity crowdfunding, instead of, participating in a crowdfunding campaign where you might get a t-shirt, but you don't own the underlying company that made the product. Congress made it legal in 2012 with the Jobs Act, so that everybody could invest the way that the wealthy have always invested. The wealthy invest in private deals, right? They buy securities in pre-IPO companies, and they make hard money loans on a fractional basis. They can participate in vehicles that we don't get access to, the rest of us. And that changed in 2012. My co-founder, Nick Bargava, helped work on that legislation. We met because I've been an investor since age 15, and I was interested in this world. I was interested in this world of how investing would change for the rest of us. We ended up coming together and creating a product that allows individual investors to invest in real estate loans that we make to investors, $10 at a time, so that just like your friendly neighborhood hedge fund, you can build a portfolio of hundreds and thousands of loans, even if you only have $1,000 or a couple $1,000s to play with. That's really valuable, because those of you who've borrowed from hard money know these loans can pay out 8, 10, 12%. They usually pay back in about 9 months. And these investors are getting the security of a first lien position. So that's the company we started. We started to create this investment product. We became a very active lender because of that. And we're a lender with a very unique loan product that I think a lot of your listeners might find interesting. I mean, for sure, you're all welcome to invest in the loans yourself. If you're stacking up capital, waiting for your next deal, that's a great place to earn a great return. Or if you're thinking about going into private lending yourself, that's a great way to do it. But I think people will be really interested to hear about the credit product that we've created as a function of that capital market.
Let's hear it, man.
And those trends.
Cool. So wait, hold on. Let me recap. So you can invest with only $10 if you are wanting to put money to work.
Correct.
Minimum of $10. That's cool, right? I'd imagine that is there a cap?
No
cap. Okay.
No cap.
So that's only
we have
half the
loans all
business.
over the country, hundreds of loans a month,
Hundreds
all
of
over the
loans
country.
all over the country. Fractional, very, very cool. It's similar to like prosper.com or Lending Club, except for those products would be not backed with the security of a first lien, right?
Correct.
Maybe a little higher rate on those, but
Potentially
I've
a lot higher losses, of course.
Yeah, I've lost money on both platforms actually, and was like, you know what, if I gave
what am
it
I
18
doing?
months or 36 months, or I'd probably be all right. But I was just like, I saw these big rates and I'm like, cool.
Yeah.
And then they don't pay their credit card off and they go into default, so on and so forth. So the fact that you have a first lien is awesome, but that's only a small piece of it. That's just on the investment side of
Correct.
You being the lender. The credit side is the people that are applying for these loans, and then you guys are crowdfunding the capital. So tell us about that. That's awesome.
So we fund 100 loans or more a month. I think last month we did $26 million in loans, over 100 loans. We're lending all over the country. What's unique about our product is special because of where we're getting the capital. If you're new to this game, or if you haven't been burned in this game yet, you have to know that the source of your capital, it's like the source of your food. The source of your capital really matters. Where is that capital coming from? Who's writing the check? What are the terms and conditions of that money that you're getting? Most people are just so psyched to have the capital, they lose sight of, what's actually in the capital, what's in the documents. Right. And what power do they have over you, right? That's the thing. What power do they have over you? What are you truly paying? What are the hidden costs? I'm not talking about the financial costs. I'm talking about the types of costs that keep you up at night, right? That make you, worry you're going to lose your equity. We have a product that is, because we look like a public company, we offer an investment product that is, qualified by the Securities and Exchange Commission. Therefore, you can go see all of our lending criteria. We never deviate from it. So we're a rules-based lender. You know what it takes to get a loan from us.
You're qualified by the SEC, is that right?
We're SEC qualified
and to offer this investment product. Doing audits on you guys throughout the year.
We do annual financial audits just like a public company does. So you can read about our finances all you want. There's 173 pages of disclosure about our company.
Can't wait to dive
on file.
But it's out there. Yes.
Go for it. It's out there.
But
the reason that matters to you as an investor is where your capital is coming from. What strings are attached to it. And because we're sourcing our capital that way, we can do some pretty unique things. For example, who ever heard of a loan that you can get that you don't have to make a monthly payment on? That's us. No monthly payment. You get a BRR loan.
No, every loan or certain types of loans that you offer?
Every loan.
Every loan. No monthly payment.
You want to come to us, you want to get a BRRRR loan, you want to do your BRRRR deal. We look at it. Look, if you watch Shark Tank, and who doesn't watch Shark Tank? You got to watch Shark Tank.
That's right.
you got Mr. Wonderful and you got Mark Cuban, right? What does Mr. Wonderful always want? He wants a royalty. And what does Cuban say? Don't do it. Don't take the royalty. Why does he say that? Because the cash shouldn't be bleeding out of the business to Mr. Wonderful. The cash should be in the business, growing the business. Right. We feel the same way. The cash should be going to the collateral. That's what we like as a lender, or it should be going into your next deal, right? That's where the cash should be going. We don't need the cash during the term of the loan. So that's a big difference. We roll closing costs into our loans. So hard money loans often come with a lot of costs and fees. That's just life, right? You got to pay those fees in order to have the money, and hopefully it's worth it. It's better than getting an equity partner for sure. It's a hell of a lot cheaper than that.
Yeah.
But we'll roll those points and fees into the loan balance for you. We'll loan you 90% of the cost of your project. And if you're experienced, if you've done 8 or more transactions in the last couple of years, you show us your experience level, we'll loan you 100% of the cost. Where are you going to get that? You're not going to get it, right?
Now, and when you say cost, you're talking purchase and rehab?
Yes, I am.
Wow. Okay. Now, so when you say that though, I would assume as an investor that's done, 800 transactions over the last 7 years, that you would have to have a discounted purchase to be able to get 100% loan, even with experience, right?
Oh, we like to see the guys that buy it right.
Right.
We We love the guys that buy it right, but the guys who are experienced are buying it right.
Yeah,
they know how to buy it right. They know how to spot the value.
If you have 8 or more transactions and you've screwed up 7 times already and you're still here, you're probably lendable.
Yeah, we know
because you keep coming back.
We have programs for the new guys, but we also have programs. We cover the whole gambit. If you look at our platform, you can invest in grade A loans, which are from really experienced guys who are putting a bunch of cash in the deal. They're fine.
Maybe they have the platform to syndicate big multifamily apartment complexes and stuff.
We don't do that. We stick with residential SFR 1 to 4 units. We'll do like an 8-door or 12-door deal from now and again, but we don't really venture into multifamily. We stay right in our lane. We know where it is. We'll do new construction. We'll do fix and flip. We'll do BRRRR loans. We're happy doing all of that. We don't really venture into the multifamily arena today.
Cool. No, I was just checking. Absolutely.
Yeah.
And it doesn't matter. I just am curious. So you guys are focused on the residential mainly.
We are.
Some small multis, right? But not the 60 unit or the 80 unit apartment complex.
We're not going there.
Yeah.
At least not today. I will say this, the larger our business gets, the more we can venture into that. We have a very large capital market, right? People are investing. I think our investors last month are invested, like I said, 26 million is what we originated. We're doing 20 to 30 million investment sales a month now. So we're getting to the point where we're large enough where we may start to venture into that territory. We'll keep you posted on that.
I love it, man. But you guys do the fix and flips and the BRRRRs as well too. Now, when you
and new construction, if your folks are doing new construction, we'll do that too.
And the new construction too. Oh, I love it, man.
Yeah.
New construction is cool. I want to add that to the list here. When you're doing the BRRRR, you guys are helping out with the purchase and or the rehab, and this is essentially short term, right?
Yeah, I mean, we're bridging until you get your permanent financing, right? The permanent financing is going to want you to season it. You want to go do that permanent financing. We want you to go do that permanent financing. We're all aligned with you getting to the point where you're going to get that low interest, long-term loan, amortizing loan. We're all going to give each other high fives when that happens, right? Because then you're locked in. You got the cash flow from the property. You're through the riskiest part of it. Life is good. Right. And you just move on to the next one. We want you to get cashed out, get levered up, get that thing going and go do your next one. We want to be there with you to do the next one.
I love it. Absolutely. Okay, cool. So let's talk about costs. Let's talk about terms. You said earlier they can turn around a profit, the investor side. So the guy that comes in and says, hey, I want to put in, $10 or maybe $500 or maybe $50,000. And they want to use the platform to lend that money out, they can get, 8 or 10 or 12%. That's
Correct.
What you had mentioned. What is the cost on the other side, the flip side? If I wanted to come
exact same. You get to choose. Now, most people that we serve know that, what matters is the capital more than the rate you pay for the capital. Having the capital is the thing. And so most people want to max out how much capital they can get. Right. And if they do that, they're probably going to end up paying, an experienced guy might end up paying 9, 10, 11% for his money, on a 12-month loan. Most people are fine with that. It's like I say, it's a hell of a lot better than getting somebody to split profits with you. Right. It's much cheaper than that.
When you say they're paying out 9 or 10 or 11%, and I agree 100%, those rates aren't bad at all. Those actually are really competitive.
Sure. Yeah, they're fine.
Now I'm not seeing the entire picture either, but that's okay. We'll get to that.
Yes,
so the experienced guy ends up paying 9, 10, or 11%. Now, are you referring to the annualized?
Yeah, it's annualized.
Okay, that's not a simple interest. That's an annualized interest.
Yeah,
so they're paying
exactly.
9, 10,
so if you get it done in 6 months, your interest cost is half. That's why most people, we work with a lot of very experienced, renovators who will be done fixing and flipping, in 6 months or less. So they may take even a shorter term and buy down the rate a little bit. The effective interest that they end up paying, the less time they need the money, the cheaper it is.
Yeah, right? Absolutely. And that's the deal. Whenever I'm borrowing money, I'm working extra hard on those projects that the money's borrowed on, because every day, every minute, every hour is costing money, right? Or it's costing more money than that long-term financing.
Since I've been a tech entrepreneur for 25 years, and I've learned that there's such a difference between sort of in people in my line of work and real estate investors. It's been awesome, to hire a bunch of real estate people and learn from them about how they think. As a tech entrepreneur, I think about growing the pie. I think about how can I take that money that I borrowed and create a project that's much more valuable, right? And I can extract a premium price because, hey man, if I'm paying an extra month or two of interest, or I'm borrowing a little extra money, but it allows me to increase the selling price by 10, 20, $40,000.
Of course.
Pays for itself. You know what I mean? Like
Yeah.
we grow the pie. And I think a lot of people who we're working with, the really talented ones, know their market, know what the market will bear, know how to build a good product, know how to get money for value. And those are the people we're excited about because we're supplying the capital to do it. Because we're not equity partners with you, you're getting all the upside of your talent and know-how, right? That's the reason that borrowing is great. Right? That's why every real estate investor who's really gotten to the point where they truly can cash flow and, and got themselves there quickly, usually has borrowed their way to the top. Right?
Oh yeah.
I mean, that's
absolutely,
the end of the day.
Man. I'm buying a 23 unit right now. I'm going to be buying this thing for $750,000. I need about $200,000 to renovate it. I'm using a hard money lender that's local, and we're paying like 12 and 2, I believe. So 12% annualized, 2 points on the back.
Yep.
Which is, in my opinion, better than 2 points on the front, just because
it is. Yep.
Work operating capital.
Well, and that's why we roll points into the balance, because you end up paying it on the back.
Okay, so that was my next question.
Same idea.
But really what I was getting at, why I even brought that up, is because this deal is going to be worth, 1.3, and we're going to be into it for 9 or 950, right? And, we're going to borrow every penny or as much as we possibly can to do it.
Of course.
We're going to refinance it. We're going to use the Burr method, like I love to teach all my students to do. And we might even cash out refi on the exit. We might even walk with 30 or 40 grand, right? So it's such a cool approach. So paying that 12% and that 2 points isn't,
it's not hurting you.
It might even be 3 points. I can't even remember. I need to look at it, but
it may be.
At the end of the day, though, that, what seemingly is a high rate is a short term. It's not a 20-year deal. It's, it's
correct.
We're getting a 10-month loan on this particular one, but like you said, we're going to scramble to try to get it paid back in 7 or 8 or maybe even 6, right? Get these repairs done, get this refi launched and going and roll with it.
The tough thing I see is guys with a good W-2 who are getting into this game. Maybe they've had a corporate job for a long time and they're thinking about sort of a second act, where they're out of the corporate rat race and they're, want to build up a portfolio. They're kind of shocked at how much you have to pay for the money, to do these projects, because they're used to borrowing, they're doing a jumbo mortgage at 2, 3, 4%. They're like, what is this world where I'm paying this money? And they have to realize it's the opportunity cost of their equity.
Absolutely.
Right.
Yeah.
It's the opportunity cost of their equity. It's doing another deal. It's buying some Bitcoin. It's, it's buying some more of the S&P 500, which keeps hitting new highs every month. Right. Like it's what is the opportunity cost of your capital, and why wouldn't you free up your capital in this world that we're in today?
Absolutely.
Right. Housing prices are, maybe they go sideways. I don't think so. Like, there's certainly enough demand relative to supply that this is a great place to be, with a real asset. And I think our borrowers are going to do just fine no matter what they pay on the debt side. Honestly, we try to deliver as low cost capital as we can, but we try to load it up with these features so that you can monetize your talent, right, and get true value for it.
I love it. So let's talk
saddest thing I see is guys who don't want to pay those rates, so they go get a partner who's going to split profits with them. Yeah,
right.
It's terrible.
50% of the net profit.
Right. Talk about a big number.
Whenever you could be shelling out like 10% of the net profit. Right. In some cases, less than that.
That's
if you're okay paying the interest at 12 or 13 or 14%, because you have to factor it into the entire deal. I totally get it.
You do.
I don't think that those rates are crazy at all. How does the points work? And then let's walk through a scenario, if you don't mind.
Sure. Points are typically for us between 3 and 4%, depending what you're doing, depending on loan size and some other conditions.
So you guys have additional administration documents and crowdfunding requirements. So
absolutely.
I get it.
And we don't charge investors to invest in our platform. We just pay exactly what our borrowers pay directly to the investors. And so it's fair. right? It's a total pass through. The way we make our money is on the points and fees at the beginning. We feel like we have to sing for our supper. We got to be a good partner. We think we are. We provide all these features and bells and whistles, and I think most people look at it and they decide it's worth it, and they decide to pay it.
Sure. Now, are the points on the front or the back, or does it vary?
They're on the back because we roll them in, right? You don't pay it until the end, so it goes into your loan balance, and then you're basically borrowing to pay the points, and then at the end, when you get cashed out, and you're repaying the loan, that's when you're actually going to pay them. It's going to come out of the
no monthly payments.
Correct.
No cost of the points up front. They're rolled in. So you roll in the interest all the way to the what would be the date that you pay it off? What's that called? Settlement date? Maturity date. There you go.
Yeah.
Maturity.
Yeah.
So all the interest isn't due until maturity. Points aren't due until maturity.
Correct.
Closing costs can be rolled in if wanted, also paid at maturity.
Correct.
You lend 90%. Unless somebody's got 8 or more transactions and they're verified, so on and so forth, you lend up to 100%. So with the 90%, is that also purchase and repairs too?
Yeah.
Holy cow, that's awesome. Very, very cool.
It's a hell of a deal.
And then 3 to 4 points on the back as well. But again, that's standard. Again, I'm paying the local guy right now, and he's a friend. I truly highly respect this guy, and he's a friend of mine. I told him,
again, know where your capital's coming from, right?
Know where your
the
capital's
source matters.
Coming from. I told him, I said, man, we're going to probably pay 70, 80 grand in interest on this deal over the next 8 or 10 months. If I'm going to pay that to somebody, I'd really like to pay it to somebody I know and respect. And he was like, cool. But a lot of people don't. There's a lot of people.
He didn't say, why are you doing it with me?
No, not at all. But there's a lot of people out there that don't know that guy. They don't have that 7-year long relationship with, somebody that I would almost consider a mentor of mine. You know what I'm saying? So, indirectly, I never necessarily hired him to coach me, but I went to tons of RIA meetings that he hosted and took him to lunch and, picked his brain several times and just giving back to him even, so I love it. So what would be the differentiator? That's the word I'm looking for, between, somebody paying 9, 10, 11, 12%. What does it have to do with experience? Does it have to do with
number one factor is experience. Okay. So your experience level, and we verify that. We want to see public transaction records. We want to know that you were part of the entity. We want to look at your experience and have it be verifiable, and if it is, then you're going to get our very best rates. You're going to get the best grade we grade every loan A through G. How much money you put into the deal has something to do with it. That's another really big factor. There are a few other things, but those are the two main ones. It's sort of
two main factors.
How much skin are you putting in the game, and how much experience do you have? And there's some other factors that weighed in there. The zip code makes a little difference. How much do we like the zip code? Do we rate it highly for liquidity in particular? More liquid markets, for example.
The zip code would matter. I would think that would be just as important as the truth person.
The truth is we would weight the zip code more highly if we didn't grow up in our lending. Our initial market was Atlanta. And we know neighborhoods in Atlanta well, that you can go to a zip code and forget the zip code. You need to know which block it is in order to really know how things are going to trade. Right. But we use, because we lend in so many places, we use zip code as like a rough rule of thumb. And so we don't value it as highly as we would if we were, in a local market actually there. Those are the main factors. And I think, you just have to decide for yourself is do you want to put more cash in it and have it better margined, or do you want to, lever it up and, borrow more and pay more? It's up to you.
What's the cheapest and what's the most expensive rates that you're typically seeing? Just
the cheapest we've got out there right now are about 6 or 6.5%. If you're experienced and you put a lot of cash in the deal yourself. Mm-hmm. I think the most expensive we're seeing realistically, we have done loans
from the hip. It's fine. Yeah.
We've done loans that have been, 16% in special situations. Sure. But more typically it's like 12 or 14 would be at the upper end of what you pay.
Yeah. Okay. We'll say 12 to 14 because you're always going to have those oddballs that come in there. And
Sure.
then yeah.
Like
Okay. So
we've done some second liens. We've done some mezzanine debt. That stuff.
Yeah. I'm not even, I don't want to go down that rabbit hole today, but yeah, I totally get that. But yeah, 12 to 14 is really, really competitive, guys. That's really good. 6 to 6.5 is super cheap. Even with my private lenders, I'm typically paying them 10 to 12%. And these are private lenders, guys, not hard money lenders. So the fact that you guys might even be able to beat some of my private lender rates is something that I definitely am interested to look at. Let's talk about time frames. As an investor, I am typically buying. Well, let's back up. As a marketer, I am marketing to buy tons of properties. And in fact, my company typically is buying anywhere from 6 to 12 houses a month, right? Some of these we're buying to rent out. Some of these we're buying to wholesale. Some of these we're buying to fix and flip. And in order to get a deal, a discount on a property, hence the name of the podcast, Discount Property Investor, we often need to close quickly. We need to be able to pay cash, and we need to be able to buy the property as is. So you guys don't have a problem with a property that's, let's say $100 purchase price that needs 30 grand worth of work. That's not going to kill the deal, right? Assuming the ARV is 200.
So we want to make sure we have seen, and this is always a discussion, right? We're looking at the price as an indicator of the quality of that collateral, right? Okay. So in your example, if you're buying it for 100K, you're well above those thresholds, right? If you're buying it for sub 50, sub 25, we're going to take an extra look.
Yeah. Right? Cause it's totally,
we just want to make sure like, okay, well, why are you getting it for that? We're also on the flip side, by the way, we also see a lot of deals that trade wholesaler to wholesaler about 2 or 3 hops. And so we'll put a limit on how much we'll support on the upper end as well. Right. Because we want to make sure that all that value isn't getting eaten up by the supply chain.
Totally.
Right? But we also
happen. And that can easily happen.
But we also work with some wholesalers who we know are good guys, right? And have good properties flowing out. And we actually provide some transactional finance to wholesalers.
Transactional too. That's cool.
We do. Yeah. Less than 30 days. Sure. So we'll be there with certain wholesalers that we know well. We have that money available. And we like that because when we do that transactional finance, we get an early look, right, at these deals. We can pre-underwrite. We kind of know what the value is. And then hopefully that wholesaler is telling their buyer, their investor about us, and we're ready to do the deal. So we like some of those. So you get too low or too high, as a lender, we got to watch out, right?
Yeah, you're going to take an extra look at those. Absolutely. Yeah. Okay, cool.
And I mean, we actually think that's a good thing because our underwriting staff is kind of like a second set of eyes, for you as an investor, right? We may see things that you didn't see, Absolutely. And we've had people thank us for suggesting, you may not want to do that deal. Or if we do it, we got to do it under these conditions.
Yeah, you're going to pay more because it's a higher risk deal. We see risk here. Are you seeing this risk here? But like you said, it's a second set of eyes. And that's something that we do all the time when we're dealing with appraisers or, even contractors, like, hey, we're estimating 40 and they look at us and they say, you're crazy. This is 60. Okay, well, what am I not seeing here?
Whoa.
That extra set of eyes is a really, really big deal. So what's the typical time frame? Let's say I come across a really, really good deal. And it's a Burr method, like something I've done 100 times. So here's a perfect example. House has an ARV of 150 and I can buy it for 80 and it needs 20.
Yeah.
That's a good deal.
A great deal. That's an awesome
great deal. Yeah.
Yeah.
Okay. So
I like it.
I get that deal. I send a contract on it because I don't need to ask anybody permission to do that. I'm going to do that. But then they accept it. Oh, shoot. What do I do now?
Where do we go from there? Getting your shit together.
This is I chose this example, Brian, because this is a real world example that I see 2 to 3 times a month, either from students or just random people that reach out to me because of all the education I put out. And I'm like, this is a great problem to have.
Yeah, it is.
Now we're going to hustle our butts off and we're going to figure this out. But before this problem, you didn't have any inventory on your shelf. Now you do, right? Okay.
Right.
So we get this great deal and we're going to reach out to groundfloor.com. I'm assuming we're going to go over there. We're going to create an account.
We're going to get you on. We're going to get you on the phone with one of our folks, one of our originators. Hopefully you've already filled out sort of the pre-application, if you will. And so we know who you are. We know what you're doing. If you've done deals with us before, you've got
it'll be a smoother process. So
yeah, because we already have a file on you.
A lot. They don't lend $1. They help me sell deals nationwide. I'm sure you're very familiar with that company. I think I probably sold 25 houses on there in the last 18 months.
That's awesome.
But yeah, once you do one or two, the process gets super streamlined.
Yes.
Yeah.
So so if you're first time, you've got to get set up with us. You got to,
it's going to take some time.
We got to figure out who you are. But the longest thing that investors, I think, don't realize, especially when you're buying at a discount, is title. Title stretches out more deals than any other factor.
Yeah. Every state's a little different.
Now we have a really tight title operation, right? And we start working it from the moment you tell us about the deal. You show us what you're under contract for, we are working title because we know that's what holds it up. Most of the time, it's not you giving us our scope of work, because most investors, are pretty thoughtful about their budgets. They know what they want to spend on it. It's not a hard thing to get to us. It's the title. And when you're buying at a discount, it's trading at a discount for a reason, and a lot of that reason is sometimes title. And so we got to get it through that process. That's the gauntlet. Cheers to the entrepreneurs who are working on cryptocurrency, blockchain solutions for title out there. Cause when all that happens, it'll probably be a lot easier to know who owns what.
I can't wait, man.
Who has what plans.
Great thing. Hopefully that's
going to be a great thing. But it's going to take a long time to disrupt that system. So I think typically getting into title and knowing what you're dealing with quickly, and don't delay on that. I think that's my number one piece of advice. And if you do that, if you're known to us and you get through title quickly, and we'll fund deals in 5 days, or 7 days. Nice. We'll be very, very fast.
You guys can act quickly.
A more typical time frame, by the time you do title and all this stuff as a new person, could be 2 or 3 weeks. It's more typical.
Yeah. So whenever the customer, me as in the borrower, or how do you refer to your customers? Is it customer or is it borrower?
We'll call it. Look, I honor all of you guys as entrepreneurs. You're like me, right? You are creating value in the world. You are taking risk. I view these folks as entrepreneurs. I think most people call themselves investors
or investors. I love it. Okay, so let's go with investors. I like that better. So these investors, they find the deal, they come to you, you guys underwrite it. Does it then go on the platform for people to buy into, or is there
no? We're gonna fund it ourselves.
Already pre-funded, basically. Or
we pre-fund it.
Okay, we pre-fund so then it. When you guys
we're ready when you are.
Just allocate resources that are already ready to go. So when these investors go in, I'm assuming they have either a low, medium, or high tolerance type of a portfolio that they get to pick from.
Yeah. No, they pick individual deals. So they're looking at your deal. There's like, oh, David Dodge, I know that guy. He's a good investor.
I've seen him on the platform like 5 times, and
I want to be in his deal.
His bills. Yeah, let's get in his deal. Okay.
I'm gonna, and the average investment is $200. I bet people probably put 2,000 in your deal. They'll be like, that guy knows what he's doing. I like the collateral.
He's got a YouTube channel and everything. Awesome.
Right. It's legit, right? So people can pick not only what property they go into, but how much money they're putting in.
Nice,
right.
Nice.
So your deal, a lot of investors like that. They look at it like, hey, there's my deal getting funded. I got 1,000 investors in my deal. The great thing about it is it's no skin off your back. You're not going to hear from those people. You don't have to manage those people. You just deal with us.
Nice.
We have a servicing team that is great to work with, highly professional. They know what they're doing.
Do deals ever get into the system and then not get fully funded?
Nah, we fund everything.
Really?
Even if a deal doesn't get fully subscribed.
Because basically you guys aren't going to even put it on the platform if it doesn't make sense, first and foremost.
Yeah.
Think, right?
It's gotta pass our filters, right?
Yeah. If it doesn't
and
pass the filters, it's not getting there. And that's why all the deals are getting funded, because they're deals.
Of course.
Yeah.
Right.
Got it. Okay.
They're good deals. People know. I mean, where else are you going to earn 10% on your money and have it turn over 10% annual rate on your money and have it turn over every 9-10 months with the security of a first lien behind it?
That's the kicker. With the security of that.
Where else are you going to find that?
So I have to ask, just because I am not a novice investor.
Yeah.
Some deals go bad.
They do.
Nobody wants to talk about this, right?
I love talking about it.
I do too, because I'm sure you guys have an awesome solution. That's why I want to bring it up.
We do.
Yeah.
So
how does that work?
Here, it starts when we make the loan.
Okay.
So we're asking you for a scope of work that tells us, with a draw schedule, what's your schedule? Now, we're all grown-ups. We know schedules change. We know we learn new things in the course of a project. That's fine. The people who have the most successful experience with us when things go wrong are the people who are great communicators, right?
Yeah.
They set it. I mean, look, as in life and in business, if you set expectations and you communicate to change expectations, in most cases, you're going to do great in any kind of relationship. And we want the same thing. So we ask for updates every 30 days. Most projects have about 4 or 5 or 6 draws. When there's a draw, we're going to send an inspector out just to check things out. Hopefully our inspector gives us the same report that you're giving us. It matches up. If not, we're going to hop on the phone with you and say, what's going on?
Yeah.
What's the difference? Or if you're behind schedule, and you haven't told us that you're behind schedule, we're going to call you up and say, hey, what's going on? You know, what are you just waiting for permits? What's happening? You know? And I think we enjoy having relationships with people who are comfortable with that, you know, and realize, hey, I got to manage expectations. I got to be clear about what's happening. And so if that's going on 9 times out of 10, 19 times out of 20, we enter into a forbearance agreement or a workout, you know, during the process, a couple months before maturity, at the time of maturity, that says, all right, looks like we need another 3 months. And we all agree we probably need another $10,000 to get this done. How are we going to do that? Right. We just want to know there's a credible plan and that people are honest.
Do you guys fund that extra cash if needed in certain scenarios?
We have in certain scenarios. Sure.
Okay.
I mean, it just depends on what the situation is, right?
Yeah, absolutely. No, but the fact that it's like not 100% black and white, I think it can't be. See, that's the thing. It can't be.
It can't be. We have a
human element, and the human element isn't just black and white.
We have a scoring system, right?
Sure.
That helps our people to do this. Cause you know, we have 817 loans in our portfolio right now, you know? So we can't pay special attention to all 817. We have a scoring system that tells us which of the 817 need our time and attention, right? And if you score, you rack up a lot of points on that scoring system. We want to talk to you frequently. You know, we want to say, okay, what's happening? How do we change
how are
this?
things? How can we help even? Yeah,
right.
Exactly. Right.
That's what we're looking for. I mean, we're here. Look, our business is not a one and done. Ours is a relationship business. We want you to be successful on this project, take that money, roll it into your next project or two, do it with us. You know, that's what we're looking for. So we want that outcome. And we've even had situations where, you know, we've ended up doing a deed in lieu where we said, okay, well, we know you can't take it over. And then a couple of years later, we're back in business together, right? Like we've actually had people who've run into trouble, but they managed it so well, they actually got another loan from us because we know that things happen.
Yeah, I love that.
Yeah.
So time frame is essentially days to weeks then, right?
Yeah, sure.
Fair to say, to get a loan.
I think people should be, as they're planning your purchase contract, you know, just because of title and other factors, the longer you can stretch it out, the better.
For sure.
You know, I realize in this market, people want a fast close. So, you know, you want to, the thing to do is to start the conversation with us and say, what do you think it's going to take? Mm-hmm. And our salespeople are trained to give you a very honest assessment, right? So we don't want to tell you, we don't want to set an unrealistic expectation that then threatens your deal.
Yeah,
right?
no, I totally get that. So what about like, proof of funds. If somebody is like, let's say that they're approved in your system already, and they even have proved to you guys those 8 deals essentially, right?
Yeah.
And you verified transactions, and they've worked themselves up, and crossed all the T's and dotted all their I's essentially, and they want to go buy this property that's worth $350, and they can get it for $150, and it only needs 50 grand worth of work. Like, that is a deal all day. I don't care what state you're in.
Let's go.
Like, that's a deal, right? So, but they have 15 grand in their checking account. How do they get that deal?
Well, I mean, they've got to have enough cash, right, to put up to it. We're going to believe you. You tell us you have the cash. We're not going to say, well, show us your bank statement, right? Mm-hmm. You've got to cobble the cash together, and you tell us how much cash you can put it. We'll tell you how much the minimum is that you got to put in on that deal.
That makes sense.
We'll tell you. So in your example,
and those are the variables that are going to affect the rate too, how much they're putting in as well.
Correct. On your example, you said I get to buy it. I get to buy it for 150. I've got 15. You may need a smidge more just to pay the costs and whatever, but you're within the zone.
You're close. Okay.
Yeah, you're within the zone.
Awesome. So they could essentially get, a pre-approval from you guys.
Sure.
And then send to that investor. That's a big thing that we stumble across, is anytime there's an agent involved, they want proof of funds because they don't want to waste their time. And I get it.
Right.
As a wholesaler, I don't have the money to buy the property. Typically I'm using contracts to control it. Right. But even if I am going to buy it as a rental, I hate using my money. Like, I've done probably 300 transactions essentially to date where I borrowed money to do deals. And I love doing that approach. If I can have my own money, like you said, Brian, in the S&P or in some crypto or doing whatever I wanted to do and not tied up in these deals, it just makes my business more fun and it runs smoother. And
buy another Tesla.
Right. It's actually more, it's more fun. And personally, I think it's less stressful when it's somebody else's money versus my money. I don't know why I feel that way. I know some people are going to say, oh, you're crazy, Dave. When I'm borrowing it, that's going to stress me out. Well, that's fine. Do it a couple times. After a while, the money is really never the issue. It's finding the deal. That's the issue, or managing people. That's typically the issues that I've seen from my
and I think that's true as long as you're sourcing the capital, as long as you're paying attention to where you're sourcing the capital. And I think that's what I've learned in this business over the last 8-9 years is, look, where you source your capital really matters. And we've seen people get upside down because they were happy to have the money, but they weren't paying attention to where they were getting it from. You want to make sure you're getting it from somewhere that's professional, competitive, reliable, not looking to loan to own. That's the problem, right? With a lot of hard money lenders or private lenders, they're looking for deal flow.
There's a couple lenders that I've run into, and I'm not going to point my finger at anybody because that's not what we do on this show, but I agree with you. There are a couple lenders that I've run across recently that, I can tell that they're going to be hard to get a hold of once they give you this initial loan, and they don't really care if you pay them back. They may just want the property.
Right. And they're ready to foreclose. They got the foreclosure papers ready to go. Right?
Yeah. Right when they send you the loan, they're filling out the foreclosure paper. It was like unbelievable. Like, they don't want you to succeed. They want to succeed by seeing you fail. It blows me away. But
and that's a good. I'll tell you, that's the thing about us is a foreclosure for us is not a win.
So far, it goes against that mindset, which is perfect. Yeah.
Foreclosure is not a win for us. That stretches out the time that our investors get paid back. They get anxious. We have to deal with that. You don't deal with that as the borrower.
We were going to talk about this, and I think I probably said something, and we
not at all.
So let's jump back to that just really quick here. So deals go bad. It happens, guys.
Yep.
I've only had 2 bad deals, luckily, out of about 700. And both of those I overpaid. So guess what? I double check now when I buy a deal. Are we overpaying? That's how I've lost money in the past. It happens. Let's say I'm an investor and I come in and I put $5,000 into a deal, somebody else's deal, and I'm on the lender side of it. and they can't get it to work. Yeah, we have this first lien, but I'm just a silent investor here. So
Correct.
what does ground floor do? What do those steps look like? I'm just curious.
So the
I know
steps
it could
for
be
us,
different in certain scenarios too.
well, it is. I mean, here are the common things though. We're communicating. Remember, I said we need an update at least every 30 days from the borrower. We're turning around and we're passing those updates along to our investor community. Cool. Via your investor dashboard. You can read blow by blow what's happened to the deal. Did it get extended? Is there a workout? Is it listed for sale? Did we install a refrigerator? What did we do?
Yeah. So you probably encourage pictures then, I'd imagine.
Sure. We love pictures, right? We'd love to see the pictures, but we don't demand them. We just want to know what's happening.
Yeah. You want an update though. Okay.
Yep.
Got it.
And so that's all happening. Now you asked what happens when it gets down to foreclosure time, right? What happens to the guy and his $5,000
it could be the
investment?
fact it could be so this could go either way, and I don't think the outcome really matters, but it could be clean where the borrower / investor just says, I screwed up, I can't do this, I'm going to sign this back over to you. Or the opposite,
that has happened.
The opposite of that would be like, screw everybody. I'm
going to burn it down.
Yeah, right. And here's the thing, guys, it's going to both of those are going to be very, very possible scenarios, right?
It's going to happen. People, this is people put a lot of their blood, sweat, tears, hopes, and dreams into this work. We know that. Our asset managers will, frequently hear from people who are emotional and they're upset. They're begging for more time, or they're in a bad spot, right? And we realize that. So one of our company values is kindness. We know that good people get into bad situations, and we train our people to be kind. We think the world needs more kindness. That's why it's one of our 8 values as a company. And hopefully nobody out there has an experience with one of our asset managers that's different from that. So
I love that, man. I mean, when people come to me and say, "Hey, teach me how to sell, like how do I go present my offers?" And I'm like, listen, there's 100 tips and tricks in the book, but 80% of it is just making friends with people. Nobody wants to do business with somebody they don't like or trust.
Have some empathy.
Everything, man. I love that. I love that.
Have some empathy. And so we start with empathy. Now, look, if the person's in over their head and they want to quit claim it to us, we are ready and able to take over. That's fine. We have done that many, many times, and we get a great result. It's good because you get out from under the pressure of it. Our investors, if we're doing a quit claim deed, they're getting their money back. It's all going to work out just fine.
Yeah. So you guys take the property back. Either easily, or sometimes you may have to have a lawyer involved.
We may have to go to court. If it's in a judicial foreclosure state, we got to go to court. Then we spend a lot of money. That's on us. We got to spend that money to recover it. Nobody likes those situations where you're fighting it out. Sometimes.
And then you guys typically list it with the local agent to sell it and liquidate it, or are you guys going in and finishing the rehab? Or like, the reason I ask is the answer doesn't even matter. I'm just super curious because I see this stuff happening around me all the time. Not all the time. Let's be honest.
Yeah.
This is a really rare scenario, but over 7 years, I've seen it a few times.
Yeah.
Put it that way.
So we've had situations where we actually go hire out contractors to go finish something up.
Hey, it's almost done.
So we can list it. It's almost done.
Right.
We more commonly will go to our network of real estate investors. And so one of the great things about doing business with us is sometimes we'll have deals in your area that we'll say, look, we need somebody to take over. You can earn some equity here. You run with it, right? We've already got the loan. It's ready to go. If you want to borrow some money from us, we're happy to do another loan on it.
Anytime you guys come across a St. Louis deal, hit me up, Brian.
I will. I'm glad I got my man in St. Louis now. That's
right.
Good.
Yeah, this is my only market that I market in a couple other markets, but this is the only market I buy in. Everything else is.
I'm actually going to be driving through there in a few weeks, so I should come.
Hit me up, man. We'll get some lunch. I would love to take you out to lunch. That'd be great.
That'd be fun. So, but look, at the end of the day, it's about a relationship. And that's what we want. We want a good relationship. If we have to go to war and fight it out because somebody's being unreasonable and they just feel like they've been wrong, we've done that. And it costs a lot of time and money. Nobody likes it, but that's part of what we're all buying into, right? We know that. We're eyes open about that.
Right. Yeah. Man, I love it. Brian, this has been an awesome episode. I appreciate you coming on. Super grateful for your time. I have learned a ton. I can't wait to learn more about this. I mean, the fact that no monthly payments that's crazy awesome. Closing costs being rolled into the loan. You guys will do up to 90, maybe even 100%, depending on people's experience. Residential, smaller multis, but mainly residential. And it can work for the fix and flipper. It can work for the landlord that's using the BRRRR method, or even people that are somewhat using the BRRRR method. Doesn't matter, right? New construction. You guys even offer transactional short-term lending for the wholesaler, which is
We'll
awesome,
do it.
right?
Yep.
And depending on your experience, depending on where the property is at, depending on the deal, there's going to be a couple factors, guys, that are going to depend or that are going to determine the rate at which you pay. However, on the flip side of that is when you're making these investments, you're going to be to capitalize on the higher risk deals to get a higher return. Unlike these other platforms that I had mentioned, like Lending Club and Prosper, and I hope that you don't mind that I bring those two up. They're nothing like what you guys do.
Sure.
But they're also very similar to what you guys do.
Mm-hmm.
The cool
It's structured
part, though,
the same.
Yeah, the similarity is the crowdfunding, but the difference is the security of a first lien. Nobody's doing that. This is awesome. I love it, man. Very, very cool.
Good.
You can get funded in days to weeks. And what am I missing, man? I think that's it. I think I wrapped up a good
you
little,
nailed it.
A good thing here. But really, though, again, guys, you can also be the investor on this. So if you're looking to fund deals, and I know I have tons of students that are constantly coming to me and they're looking for a lender that can help them out. And, I typically tell them, hey, go to your local RIA, but COVID has killed that. And it's hard.
Tough.
Like some of the RIAs are starting to come back now, which is great, but there's a lot of these RIAs that aren't. And it is hard for a lot of people to find the capital if they don't know where to look. So guys, if you are listening or watching or viewing this podcast, connect with Brian over at Ground Floor. Brian, do you have a contact information or a favorite social media platform, or would you prefer people go to the website? You tell me.
Hit us up at groundfloor.com. That's the best way. Go click on borrow and you will be in the flow. You can kind of put a deal in and start talking to our people about it. They'll be right with you pretty quickly if you do that. What people who are on Twitter, we're also, groundfloor_com on Twitter. So you can find us there. I think we do some stuff on Instagram too. You can probably find us there. We're around. It's not too hard to find us. Or if you want to pop me an email, I'm just Brian, BRIAN at groundfloor.us. That's the cheat code to the email, .us.
Okay. So Brian at groundfloor.us, right?
Yep. That's me. Yep.
That's a good email to connect with Brian. Brian,
Absolutely.
Thank you so much for coming on the show. Thank you for giving us about an hour of your time this
You're
evening.
welcome.
And I'm looking forward to connecting with you, man. So when you do drive through St. Louis, hit me up a day or two before. We'll get you some lunch together. We can go down and look at the arch if you want. And just really want to get to know you a little bit more, because I have tons of people that are constantly coming to me that need this right here. They need this product, man. So I think that we're definitely going to be able to send you some business as well. So any parting words for the audience today?
Be good to each other, man. It's tough out there for a lot of people. So you never know what people are going through. Just encourage everyone to be good to each other.
Man, I second that, guys. Be kind. And that's one of the core values over there at Ground Floor, guys. I love it. All right, Brian, signing off for today. Guys, thanks for listening. Don't forget to leave us a positive review. And you make your money when you buy. You get paid when you sell. So learn how to buy right, and all the doors, all the exit strategies will be wide open to you, and you can get out there and you can make money, hopefully with little to none of your own. Signing off, guys.
Thanks for listening to the Discount Property Investor Podcast. If you enjoyed this episode, please like, share, and subscribe to help us reach a wider audience. To jumpstart your real estate investing career, visit freewholesalecourse.com, the most complete free course on wholesaling real estate ever. We would also appreciate it if you left us a review on iTunes or Stitcher. Thank you in advance for your support. And remember, you make your money when you buy, you get paid when you sell. Now let's go build some wealth.